Hi, I'm Matthew Carr, Chief Trend Strategist for the Oxford Club, and welcome to this week's episode of Market Trends. Today, I'm going to talk about Wall Street's next $1 trillion market. And it's one that's already making everybody's favorite Hank Scorpio impersonator richer. Now, in 1962, E.M. Rogers came up with his diffusion of innovation theory. This is one of the oldest social sciences theories. And for the past several decades, it's provided an extremely profitable blueprint for investors to follow, particularly now. Rogers' theory breaks down the technology adoption cycle into 5 main segments, from those early fringes all the way to being completely mainstream and ubiquitous. And as a piece of technology moves through this cycle, it gains more and more market share. Of course, not every piece of technology becomes commonplace. In those early stages, in those nascent stages, the early adopters and those innovators, they're the ones that are really driving the growth. These are the people that want the latest and the greatest, regardless of practicality or whether it has all the bells and whistles. But to go from that early market to the mainstream, an innovation or a piece of technology has to survive what we call the chasm, crossing the chasm. This is a difficult jump. Not every piece of technology survives, but there is one that we know that's poised to make this leap. Currently, electric vehicles are in the early adopter phase, but they are gaining traction. And by 2027, the EV market will be worth more than $1.2 trillion. And by 2028, this innovation will cross that chasm. That's when electric vehicles will gain 16% of the total automotive market. That's a huge, huge piece of the pie for a technology that has been on the fringe for such a very long period of time. Of course, we could see this pick up speed because at the moment, 16% of Americans say they are likely to buy an EV the next time they're in the market for a car. And public interest, as well as investor interest in electric vehicles, has been just surging. In fact, there's been a stampede into electric vehicle makers already this year. Shares of Tesla, Nikola, NIO, Workhorse are all up more than 250%. Those gains in Tesla have made Elon Musk, again, one of the wealthiest people on the planet. Now, these 4 tend to grab all of the headlines, but there is another play here that I think has a lot of upside potential that I don't think should get lost in the shuffle. It still trades for less than $12 and is reporting record revenue. Blink Charging is a charging station company, as its name would imply. It has thousands of charging stations deployed across the United States. These are in airports, car dealerships, hotels, medical facilities, parks, restaurants, you name it, that's where they're at. In the second quarter, revenue for Blink jumped 120% to a record as EV charging product sales soared 350%. That's a huge, massive year-over-year leap. But when we look ahead to 2021, we can see that revenue is going to have another significant uptick of more than 50%. And it'll be another series of record quarters for the company. So if you're an investor who believes in the EV boom, and we can see that this innovation is going to cross the chasm by at least 2028, if not sooner, then yes, you should own shares of Tesla, especially after the upcoming split. You should have exposure to Workhorse, Nikola, and NIO. But definitely don't sleep on the opportunity of Blink Charging and the expansion of its business, because there's a lot of electrifying upside here that's sure to spark any investor's interest. I'm Matthew Carr, Chief Trend Strategist for the Oxford Club. Thank you for watching this episode of Market Trends. For more information like this, be sure to go down to the description and sign up for my free e-letter. Until next time, here's to high returns.